Hello, everybody. Thank you so much for your Polygon. Today we have two special guests coming in from MetaVault Trade. How are you guys doing today?
Great, fine. And you?
Very
Welcome,
well.
everybody.
Good, thanks. Yeah, it's great to have you guys here. I always like to kick things off doing introductions. So, why don't you tell us a bit about your backstory? What you were doing before crypto, what got you involved in crypto, and what ultimately got you to be a part of creating MetaVault Trade?
Yeah, we're both friends, know each other for a couple of years, and basically we are crypto investors and for a long time. Is my mic okay?
Yeah, you sound great.
Um,
Sorry, it's the only one I got right now. Um, yeah, I hope everybody is hearing me okay and it's not too bad.
You sound good. Don't worry.
Sorry if there's any. All right, cool. Yeah, so we know each other for a long time. Both have a background in investing and trading. So for us, it was always like, and then, we always wanted to build a project together. We've both done work in IT and yeah, the last year is basically crypto investing, and so we've talked like almost all the time, and decided that GMX is a really good target, basically to really good exchange. Steve got really into it, invested heavily, and tested it for a while. And basically, at the end, we we forked it. Started with talking to the team of GMX. Sorry, and yeah, in the end, we worked on it, and now we are friendly fork. 1 second. Sorry, guys. So yeah, and for us, it was kind of like a really good experience to build something from, yeah, not from scratch, but basically building it in a way we want, like new tokenomics, fresh start. And yeah, so now we have a team for about a year. Well, that's the intro.
Cool. Yeah. It's a pretty interesting backstory. So I don't know. Do you want to tell us a bit more about what? Sorry, what was the name of the protocol that you forked?
GMX.
GMX. So
Yeah,
like,
right.
I don't know. How does GMX work? Like, what services does it provide for DeFi users? Like, what inspired you to fork it?
First of all, I was one of the early investors as GMX deployed on Arbitrum. And after a long journey, I understand fully the technical and tokenomic specification and understand that's a unique piece on the market. It's hard to understand in the beginning how this tokenomics and this revenue sharing system works. And JMix improved itself over time too. And later, Antonio from our team decided to contact the core developer of GMX to um, understand or to collaborate with the GMX team for a friendly fork or a partnership. Over the time, we get some support of the team, and they told us that they have nothing against a fork on a different chain, and so we start first the reverse engineering and building this up. GMX is a spot and perpetual trading exchange. Uh, in DeFi, how to explain this long, short leverage trading on different assets are actually done on the centralized exchange like Binance or Bybit. And many people facing scam wicks or called liquidation cascades because the pricing on central exchange are based on order books, and they are easy to manipulate for bigger players to liquidate other people on the, because you can see in the order book where the liquidation price are at. And GMX made it on the other way and using only price oracles for pricing and to decide who get liquidated or get profits. On the other side, as liquidity provider, you are part of the bank because the liquidity pool is the bank which the traders are gambling against. Well, when I open in a long position and hope that Bitcoin price will rise, my counterpart is the liquidity pool of the portfolio. So you can lose or win against the liquidity pool. The fees generated from this trading for open leverage or closing leverage positions or your profits or loss are distributed to the stakers of the liquidity pool or the native token of the platform. So that's a unique piece, and you get paid in the native token of the chain. On our side, it's Matic. On the GMX side is AVAX or Ethereum, and that's the big difference to other platforms where you get rewarded in own inflationary tokens.
Okay, cool. Yeah, that's really interesting. I really like how you highlighted the benefits of doing a decentralized exchange versus trading on a centralized exchange. Like, I don't actually trade much myself, but some of those terms like scam wicks and liquidation cascades, I hear them from my one friend who trades a lot. He complains about that a lot too. So that's really interesting to hear that this is something that mitigates the risk of that using oracles. So speaking of oracles, so you guys have integrated Chainlink into your?
Yes.
Are there any other
Yes, correct.
key
We
partnerships?
have two different pricings. One is the core price feed is provided from Chainlink, and during position opening or closing, our keeper is checking if the price of the Chainlink is actual and taking the average price from Binance, KuCoin, FTX, and Bitstamp to get the average price and check it's in the deviation or in the slippage tolerance of the trader. And when that's the case, the keeper execute or decrease your position. Other partnerships, actually, we cannot disclose so much. We are integrating some features with the Synthetics protocol on Polygon, and we are in contact with some sub aggregators, and we don't know when the integration will happen or not. And it's general in crypto that announcement or partnership will disclose after the integration or the partnership.
At least we do it this way. Not
Yes.
everybody does, but we're going to talk about it once it's done, implemented, and working, and not before.
I respect that. You gotta police the alpha. Can't let the word get out before too early. Better to
It's
under promise and over deliver kind of thing.
exactly, and also like you never. I mean, it's also a counterparty risk. They have to integrate with us too, so it's not just our code. So they have to do things, and we just want to make sure that everything works, is tested before we basically let people use it. That's also why we delayed some features in the beginning just to test thoroughly and make sure that there's no extra risk or anything that can go wrong, basically.
For sure. Randomish Walk is asking if you guys could talk a bit more about your relationship with GMX. Why didn't they launch on Polygon themselves? And I also want to ask you guys, like, you were deployed on Polygon as well as Near. Why did you choose to deploy on those blockchains?
We're not on Near yet. So we're only on, thanks for the question. It's a good one. One thing we can answer, we are currently only on Polygon, and there is no timeline right now that we would be comfortable sharing about expansion. Of course, our system is built to support multi-chain. We have token supply reserved for liquidity. So it's all okay on that front. But for now, we just want to basically get the word out. We want to build our trading base and build our community before we expand. To GMX, we can't say anything about their decision making, right? It would be appropriate to ask them why they didn't expand to Polygon. I think they have their roadmap, and you can only I mean, it's not so easy expanding to more chains, right? So, but I don't want to speculate on their decision making. We have a good relationship with them. We talked to them before we announced anything, really, before we heavily invested in dev to build this, and always had a good relationship. So there is no animosity between us and the GMX team, and we are in touch with X for a long time.
And we speaking about expansion plans in front before we cross maybe interest of GMX or our side. So our decision making is like collaborating with them, and we don't want cross interest where we want to deploy on other chains. Maybe they want to deploy. So we want coexistence to GMX and not competitor of them.
Exactly.
Okay, cool. That makes a lot of sense. Did you guys want to jump into doing a showcase of your dev?
Yes. So give me some seconds. I hope everybody can see my screen.
Yes.
That looks great.
Okay, great. So first of all, that's our landing page and the general dashboard where you can see the overall stats, assets under management, pool size, 24-hour volumes, open interest, long positions, fees, signs, collected signs, the last distribution, total collected fees, total volume. We can go to the trade interface. So let's load first. So we have three possible things to do here. We can open long positions on market or with limit orders. With a price trigger, I can say I want to open a long position on Matic with 30x leverage at the price, let's say, and the price at 0.68. So other one is I can open a short position with market and limit orders, the same leverage size here. You can select in which you want to get your profits. On short, you get stable coins back. On long position, you get the token you long in the side, or you can swap between all assets. You have possible eight. We have 8 tokens in the basket, so 8x8 you can swap against every asset in the pool from every asset, because we're using Chainlink price feeds, so it's not a problem with price slippage. Normal AMMs calculating the price of the token with the token whites in the pool. On this multi-asset pool, the pricing comes from a feed, and so the vault is calculating the exact swap amount, and when you make the transaction, you get the exact amount back without any slippage. We can open a market long position for Matic. Let's say we want to long with 50 Matic. My position size will be $985. Our entry price will actually 0.6657. Profits paid back in Matic, all told in long. My actual liquidation price will be 0.6498, and the fees for opening this position will be $0.98. So first of all, when you're trading the first time, you need to approve leverage or enable leverage. So that's what's the problem actually? Let's load. waiting for the first transaction, and after this can long Matic. So let's wait that RPC update. So before we confirming the order, we have a small overview. I will pay 50 Matic to long 1,479 Matics. Profits paid in Matic, leverage, liquidation price, fees, my collateral amount, spread is 0, entry price will be this, my borrow fee for this position will be this, and my actual allowed slippage is 0.2. That's when the price during the execution change, the keeper checking your allowed slippage, and when it's in this tolerance, your position will be executed. So let's open the position. So long submitted. When the position is opened or in the executed, first of all, it will display it here in positions. Actually, the position is opening. That means the keeper is actually checking the prices on the centralized exchange. And when this is in a deviation, the position will be executed on the wall side. Generally, it takes maximum 20 seconds to that happens. So the position is now opened. So my entry price was 0.6674. My liquidation price will be 0.6587. This liquidation price can change over time when the position is open for a long time because the borrowing fees of this position. We can change the position with increasing our collateral or withdrawn collateral. That will change your leverage or increase or decrease the leverage position or close partial your position. On the other side, we can close the position on market, or we can trigger a stop loss or a take profit order. So for example, I want to close this position when the price hits 0.68. That will your profit or loss will display here. Your possible. What will happen is that your size will go to 0, your collateral to 0, and I need to pay a closing fee from $1. This closing fee or opening position fee is 0.1% of the position size. When the price will hit 0.68 of Matic and the limit order executor will take my position, it will be closed and I will get back nearly 60 Matics. The execution fee for limit orders is actually 0.55 Matics. So let's enable first orders. For the first time, you need to confirm this box that in fifth situation, the position will be not executed. That's the main reason will be that the keeper will not pick up your order or the specific price was reached, but not long enough to be executed. Sometimes the price hitting for 1 or 10 seconds, and in this case, the executor cannot pick up your order. So first of all, we need to enable orders or limit orders because you need to confirm that you read and agree this terms and conditions. After this, we can place or take profit order. On the other side, we can make the same with lower price or stop loss positions. So let's wait until this interface update. So now create order, wallet. So On charts, we are actually implementing TradingView Pro, and in the next week, I hope that we can implement this update, and then there will be some chart analytics available. So in this case, your take profit order will be displayed here with the actual market price and your trigger price, and you can also edit this or cancel this limit order too. On this side, your trades will be displayed. When you are not logged into the wallet, all trades on the platform will be displayed here. We can make other showcase with, we are swapping now USDT against, for example, Matic. So we will be swapping 100 USDT to Matic. The fees are actually 0.35%. These fees are not static. They are changing over time with the pool balance. When some assets are underbalanced or overbalanced, the fees changing. So first of all, we need to approve spending USDT. After this, we can make a swap. All price on the platform, when you can see here, the USDT price is not stable $1 because the real price of USDT is actually 0.997 US dollars because the platform taking the real dollar value as reference. So we can now swap 100 USDT against Matic. Again, here will be shown 1.4819 Matic to USDT, spread 0. Fees to pay will be this. Your actual price is this for USDT, and the Matic price is actually this. The price decimals are 18, but we cannot display 18 decimals on the interface, but in the end, backend, it will calculate it absolutely correct. So we are now swapping 100 USDT against Matic. So you can look the transaction on the block explorer. Let's wait. That transaction are confirmed. These are the normal general function of the platform is leverage trading, also called perpetual trading, or normal swapping on the platform. So the transaction is confirmed. Now you can see the exact transaction, and it went through. One other thing is staking and providing liquidity. The platform has two different tokens. One is called MVLP, that's liquidity provider token for the multi-asset pool, and we have also the MVX token. About the reward or distribution model, 100% of the fees generated from the platform will be distributed to the stakers. The split is 70-30. 70% of the fees generated from the pool, from the platform, will be distributed to the liquidity providers because they're taking the most risk on the platform as fluctuation or fluctuation of the price of the assets or counterpart risk against traders. And the other part will be distributed to the MVX stakers as Matic. So we can check the actual APRs. In Matic, 3.23% and Escort MVX are 44.5% as rewards for an MVLP staker. When we are providing liquidity, we can choose which liquidity we want to provide. You can provide all assets in the pool, or I called the fees or calculated on base of the whites on the pool. And when you want safe fees, when you add in liquidity, you put any amount you want to deposit, and on fee side you can check which fees are actually applied for providing this liquidity to the pool. On the other side, we can check the overall supply of MVX on the dashboard. We see the actual price on Polygon is $1.0288 per MVX. We have a supply of 4 million. Most of them are actually blocked on the multi-signature side. How Arthur explained before, we have enough reserves on the tokenomics side for multi-chain expansions and similar. The actual real circulating supply is 1.5 million MVX actually. So the total staked amount is $1.481 million, staked on Polygon 1.439. So it's nearly 35% of the total supply is staked. 4% are not staked, and 4% are pooled in the liquidity pool owned from the protocol. Then we have the liquidity pool. Here on this right side, you can see the utilization rate because of trades are open interest, the targeted white of this asset in the pool, and the actual white. Also, we can see the real prices provided from Chainlink and the general amount pooled in dollar value. And when you go over the hour, you can see the general amount deposited in the vault itself. So that's normally the general use case and the overview and showcase of the platform. We have also referral program. That means you can promote this platform and get 10% commissions paid out half for the trader and half for the affiliate itself. They are paid in the token traded and will be distributed every Friday. So you can generate a referral code for, let's check, Polygon testing. We can first create a referral code on the site. After this, you get a referral code or referral link, and when you're sharing this referral link and people joining about this link, you will get lifetime commissions from this trader. So I can copy now this referral link and, for example, sharing this link on my Twitter account or on my social profile. Another side when I am a trader, I get fee cashback when I'm using a referral link or referral code. So the fees paid for open or closed positions, you'll get 5% fee cashback. Also paid every Friday. So when somebody have any question, I can answer this.
Yeah, we got a ton of questions coming in actually. One question though I want to ask, like, you guys are a decentralized perpetual exchange. So I just want to ask like about how you're, what constitutes like making you decentralized, if you want to like maybe break down how the liquidity for trading was provided. Like, is that majority of that coming in from random DeFi users, or how does that all work?
Some parts like shown here on total stats is protocol on liquidity. During the pre-sale phase, we raised over $1 million, and 500K of this was deposited as initial liquidity for the liquidity pool. And also our mothership MetaVault DAO provided 90% of his treasury as liquidity provider, and the rest is provided from normal DeFi users. So we have actually 1.832 MVLPs, and 50% of this liquidity or less is provided from the protocol itself. and this earnings from its own liquidity will also distribute it to the MEX stakers. What other part makes us decentralized is that we have no any restriction for your residents, for your we are not tracking any IP addresses, locations from users, and also you have no limitation or withdrawal or swap amounts, so you can swap how big the pool is, and there's no limitation like withdrawal limitation on centralized exchange, or you don't need to make a KYC. The price oracles are open source on our side. We have no intervention chance against liquidation price, or so we cannot manipulate liquidation prices. We cannot manipulate the keepers. We cannot manipulate anything on the side. So everything is on chain. So the price submissions are on chain, liquidations are on chain, the price feeds are on chain. So and not only generated or submitted from our side. So the liquidation bots run from the protocol. The only metric which executing your liquidation is the Chainlink price feed. And to manipulate the Chainlink price feed and to make Oracle exploit until now on Chainlink is nearly impossible.
Cool. Thanks for breaking that all down.
And also like the general fact that you keep the assets in your wallet, you don't have to transfer anything to a custodial account before you trade. So that's also
yes. You're trading directly from your wallet. Yes, correct.
Yeah, for sure. Keeping retaining custody of your own assets is super important.
Mm-hmm.
I highly value that, and
yeah,
I've tried it. My one
just
friend who
recently
tries to get me to he trades on these sketchy like forex brokers, and I'm like, buddy, like you could just trade on like an on-chain broker and retain custody of your assets instead of risking them. Like, I don't know. Yeah. So
it's very risky, as recent events have shown, right?
Yes, correct.
If you don't have the keys, it's not your coins.
Yeah, not your keys, not your coins. I love that. So I want to jump in. We got a huge list of questions coming in, so I want to jump into some of those.
Sure.
The Yash, he's got 3 questions. So first one is, could you talk about legalizing MetaVault into MetaVault Foundation? He says that you mentioned that in your roadmap for Q3 2022.
For the roadmap of the MetaVault DAO, we are planning to make a legal entity, the DAO. MetaVault Trade is a subsidiary platform of the MetaVault DAO, and we are actually looking for legal or entitying the DAO to a legal entity. We have seen some countries opening DAOs to be a legal entity or foundation, but we have no specific roadmap actually for this. So we want to look how this works on the Marshall Islands, and we see some other place on the planet where we can make DAO to a legal entity, but we make not the decision yet, and when it will need to be voted from the DAO itself. But this will not change anything to the MetaVault Trade platform, or that's decentralized.
Okay, and then his other questions are relating to, you already touched on this a little, but it's related to expanding on other chains like Kronos and Near. And then he also is wondering about an audit. Like he's wondering if there are any plans in place for an audit.
For the audit, actually, we forked the GMX code base, and that's already audited from ABDK, and otherwise we applied for ecosystem grants from Kronos to deploy there, and in this grant system these grants are applied for the audit of the platform. We are waiting for the decision of Kronos for the ecosystem grants, and when this is granted, we will pay the audit for the platform with this grants. We don't want actually use any treasury assets to pay the audit, because nothing changed basically on the GMX side, and the audit is public from GMX actually.
Sweet. All right, let's move on to KA1H, or perhaps your name is Kai. Kai H. I'm not sure. I'm sorry. Is there anything you can share about the release of MetaVault NFTs, or is it currently too early to talk about that?
We
Early.
plan we plan like the NFT like GMX make with this Blueberry Club, but to be honest, actually the community is too small to make a NFT release. We have developed all and finished the development of the NFT project. We actually thinking about the use case, how we can give um,
A further
value to these
utility.
NFTs. Yes, utility to these NFTs. We want to change parts of this Blueberry Club system, and soon, I hope in 1 or 2 months, when we get more user base, we can mint the NFTs and distribute to the MBX stakers.
All right. His next question is regarding your plans to build up a community. So, how do you plan on? What are some of your plans to drive adoption to the platform?
Archer, if you want, you can forward on this.
Sure. Yeah, so we are currently, I mean, we have many things prepared, like a trading competition that's going to start at some point. What we now finished our affiliate system. That's something we want to focus on to show people that they can make money bringing new traders to the platform. And so we prepare a lot of educational content for this. We have a partner for this. It's called Roundtable DAO. They supported many projects for a couple of years, and they've been very, very competitive in the market as like a marketing support group, like a DAO, and they also invest in certain projects. So we're gonna work closer with them. And at the same time, we are also looking to hire a growth manager to help us just get through the daily tasks. And we have community members being active, helping to build the community. But I mean, let's say the market didn't necessarily, do us a favor. So it is a bit slow. So whatever, tell your friends, of course. Subscribe to our channels. We welcome you to our channels, definitely. And I'm going to make sure that there's more and more content coming out for people to learn about the details and why it's, why trading decentralized is better than centralized, and all of these topics we want to touch on.
Sweet. I just recently got into the YouTube game myself, so I'll make sure to check out your channel and give it a sub. Haggis Hound
Nice.
is wondering, could you explain more about how the tokens in the multi-sig would be used in expansion? Like,
Yes, it's really easy. I open documentation on tokenomics displayed here. The supply, we have 10 million max supply. Actually, 4 million are minted. This 4 million minted are 1.5 million are allocated to the pre-sale. Actually, 200K are in the liquidity pool. 800K are reserved in the multi-signature actually. And for partnerships, community development, marketing, and team token are actually staying in the multi-sig. And after this 3-month cliff, the rest time they will be locked in the team wallet itself. So we distribute after 1 month the team token to the team members as vested tokens. So we make a mistake in the beginning, to be honest, that we minted too much MVX. So it was not needed that we mint the marketing allocation or the team token in front. And actually to burn them and remint them make no sense for us, because it's a little bit hard to make this on the contract side. So we are waiting that this time will come to distribute the partnership tokens or community development tokens or bug bounty tokens from the multi-signature to this real destinations. So actually these tokens are parked for the liquidity pool, for the allocations, for marketing, partnerships, community, and team token. The mode signature have 5 signers. There are 3 core developers, myself and Archer, and so we only making transactions when it's necessary, and everybody can check the mode signature wallet, the transaction history, and what we make the token, or even distributed or not. So we are acting carefully to avoid any thinking of people that we make any malicious transactions or not. So that's the case why we have so much token actually sitting in the mode signature.
Cool. Thanks for breaking that down and explaining it. We got another question coming in from Aditya. He says Binance took all the Luna and UST pairs off their exchange after their death spiral happened. How would MetaVault handle / possibly prevent a similar situation? And I want to add to this question and say, like, is there a like what's the decision making process for deciding what tokens get listed on MetaVault Trade? Is there like a screening process you guys do, or is it up to a form of governance? How does that all work?
Actually, we have on the non-stable side, Matic as the native token of the chain, Ethereum with the highest weight, Bitcoin, Link token, Uniswap, and Aave. On the stable side, we have USDC, USDT, and DAI. Against any unpacking situation of the stable tokens in the pool, we have this real price feeds. So you can see they are not strict stable in the pool. For adding any token to the pool that need to be voted from the community, because any adding of any token to the pool faces risks for the pool itself, because it's a multi-asset pool. We are planning to deploy a second MVLP for mid and small cap tokens like a Deegan trading pool, but it will not actually bind it to the main pool. For the other decision making for which tokens will be maybe added or not later on is one fact that when a token is added to the pool, only thing we can make is to lower his weight or the limitation of this token in the pool, but we cannot delist it later. So when we add a token and token unpacked, or we have cascades of liquidation, only thing we can do is lower the pool size to $1 and the weight to 0%, but it will be shown in the interface. Or we can see this on the GMX side with meme, Magic Intent Money. Why we chose this tokens is mainly they are bigger caps. We have enough liquidity on Polygon itself, because that's one major thing is I can add a token, but when there's no liquidity on the chain itself, it's hard to get traders or liquidity, or you will face a lot of slippage on the other side, or the arbitrage bots can drain your pool, because there are high price differences on the free market like QuickSwap or Uniswap, and your pool cannot be balanced well, because arbitrage bots, when they see profits and our pricing is not based on pool weights like a normal AMM, so we have price feeds, and on Ethereum the other price is $48 and on Polygon is $85, so the arbitrage bots will take all the other token out of the pool. So some points we need to check is every time this. We are planning to add maybe Curve at this moment or make a proposal, but we are really too early for this because our platform launched 1 month ago, and first we need the consolidation phase and growth phase until we can add any other tokens. Otherwise, we need providers for this, we need trader for the token, and when token get no utilization on the platform, it's it's not satisfying any investor or a staker at the end.
Yeah, for sure. That makes a lot of sense. Cool. So we can see that like Matic is currently definitely the most utilized token. Is that what is this tracking? Is it like an all-time tracker? Or is it like a 7 day
And then
period?
the utilization rate actually shown in the dashboard is the actual lifetime utilization rate. For in-depth statistics, we have the subdomain stats.metavault.trade. And here you can see the trading volumes from today. There was 153K swap volume, adding liquidity, removing liquidity, liquidation size, margin trading size, cumulative total volume. On the right side, you see which fees are collected from these trades. We have the overall MVLP performance against normal USDT, USDC BTC or Ethereum USDC pairs on Uniswap. We have this assets under management and MVLP supply tracker. How you can see the MVLP supply and the pool size or the pool amount in USD, because there are some non-stable assets inside the pool, so the assets under management can fluctuate because you have Ethereum and Bitcoin price going up or down. That affects this. We also have this traders net profits or loss. You can see on some days the traders make losses, some days they have profits. On this side, you can see how much loss on this day was or profits. And this borrow rate analysis is your historical chart for utilization rates. So on the dashboard itself, you have the real-time values on utilization. And on the in-depth statistics side, analytics side, you can see on which day how much utilization rate you had for each token.
Sweet.
So the statistics are really detailed and hard to understand for somebody. Yes, correct.
I like that you aggregate all the data into this intuitive interface. That's really nice. If anyone else has any questions, make sure to get them in quick because we are starting to run short on time here. Yeah, so far we've had 5 people ask questions. So I know there's a little bit of a token giveaway going on for best questions asked. So definitely incentivized to ask them, and it's a great time to do so while we have 2 co-founders here. So you guys launched back at, I want to say, the start of June, correct?
1st June was the start, but leverage trading start nearly 15th June. So 2 weeks after the main launch, the leverage trading was enabled. Until 15 June, it was only swap interface was enabled.
Cool. What's it been like for you guys building through this market? And do you have any advice for people who are currently, weathering the bear market?
Balls of steel are definitely good. I mean, I think in a difficult market climate, it definitely pays to have a clear mission and objective, and don't get distracted. Just have a roadmap, build it out, do your sprints. That's the advice I can give. And also, I mean, for us it was okay because our use case is trading, right? I mean, you trade in a bear market and you trade in a bull market. We also allow for shorts, so why not? So we do think it's a product that can, survive different other market conditions or more difficult ones than maybe other projects. So that should also be tested.
Cool. I think that's great advice.
And also the team funding is autonomous from the platform fee generating, because we as a team has a software company based in Hungary and in China, and the revenues generated from this software companies paying our salaries for the crypto development. So we are autonomous from the market conditions on crypto side.
Sweet. Aditya is wondering if is like a way to convert fiat to stables directly. Like, do you have a way to do that within your platform? And if not, are there any plans, sorry, to integrate some sort of fiat on ramp?
Yes, we have contact to one provider which approached to us that we can make a cross-chain or fiat onboarding system to our platform directly. But we are actually in the phase of collaborating and looking inside how we can integrate this or how we can build in this to the platform. So it will maybe possible to buy directly MVX or add liquidity over credit cards on bank deposits, or you can directly bridge into the platform from other chains. But it's not clear. We have no clear roadmap for this actually. But it's on the task list, and we are looking inside with the other team for this.
Okay, cool. That's good to know. Something to look forward to. Ram Prabhu is wondering, is there any transaction fees when using your platform? And he's also wondering, there's a line saying protection against liquidations. He's wondering if you could elaborate on that.
Protection against liquidation scam wicks. So we know everybody which trading leverage. You don't never know why you get liquidated or why this price drops for this 5 seconds to liquidate and go up again. I can explain this on this way that on centralized exchange liquidation are based on order book prices, and our price which handling this liquidation is only the provided chaining token. So that's helping many people to not get liquidated during 5 seconds or 10 seconds drops. For we see every time there are some scam wicks for 10 seconds, the price dropping 5% and then catching back. And so on other platforms, when the price of your market order or will trigger, you get liquidated. And on our side, the liquidation bot's only checking for the chaining price hitting this price range. There was one more question about the fees. We have general three type of fees. One is opening or closing leverage positions. The fee is 0.1% of the position size. Then we have swap fees. They can change with the pool assets whites. And the other side, the execution fee and the limit order fees are based on the trigger of the order. So you pay 0.5 Matic for the executor or the keeper to execute the position as a commission to pay the gas fees of the keepers and the decentralization. So that there are the spots running on chain, and we need to cover the transaction fees. And for this, we decided, like GMX, to take a very small amount of money to cover this bot gas fees.
Fantastic. So we are running short on time here, so I've dropped some links in the chat. We got the MetaVault.trade website, Discord, Medium, Twitter, and then your documents. Is there any other links that should be shared for people to follow up with you guys?
Telegram, maybe.
Yeah, let's get the Telegram. I'll get that right now. My bad. Great. Yeah, those are some great questions, everybody. And, it was a fantastic presentation. It was a pleasure having you guys on.
Thank you very much.
Thank you.
Is there anything else you wanted to touch on before we wrap things up?
I'm good. I mean, thank you all for listening in, for tuning in, and we are looking forward to welcome you to our site and try it out. Yeah, do a couple trades. Let us know what you think. If you have any recommendations or feedback, yeah, we're usually in the chats to see them immediately. So do not hesitate.
Yes, we are here to help, and when somebody have improvement proposals or see a bug, also they can contact us. We're helping
Yeah.
directly,
And we
or
usually
everything is
do a
very fast.
very fast execution. Yeah, we had like recently we had a community member suggesting reducing our pool size, and I think took us, after evaluating, it didn't take us
1
long
hour.
to implement. 1 hour, yeah. And it was a really good decision.
Yes.
All right.
Awesome. Well, thanks again for coming
So
out,
yeah,
everybody. It's great having
Yeah,
you
thanks
thank
for
you
guys.
being a
all.
great host.
Awesome. Thank you. And yeah,
Talk to you
hopefully,
soon.
yeah, we'll talk again soon. All right. Bye,
Thank you
everybody.
guys. Bye.
Happy day. Bye bye.